Friday, the 28th of September, a very special day for Nigeria's central bank. Of course, the Monetary Policy Committee communique to be delivered by the governor of the central bank in a couple of minutes, at least within the hour. But before that, our panel of analysts here at our headquarters in Lagos, bringing some of these issues into broader perspectives, providing insight and some outlook on what to look forward to after those decisions are announced by the Central Bank Governor Bola Haino, who is head of investment banking at Quadros Capital. Thank you very much. Uche Naminis is a chief market analyst at Eagle Global Markets, and Wale Lucy, the third member of the panel, is the head of research at United Capital Listed Investment Bank. Gentlemen, thank you. Let's look at we'll hear from the governor in a few minutes, but again, just before we took a break, Bola, you were talking about the fiscal reforms that we need to carry out. This will have to be very, very critical and perhaps political. This week, Kenyan authorities announced a major spending cuts. They're cutting overseas trips, spending overseas trips for cabinet members and others. So do you think we can take such bold moves? Do you think we can do that here?
We should. What I would do is under kettle of fish, but I think we should, as much as possible. We need to block leakages. We need to bring costs very low. And of course, we need to diversify the economy. So Nigeria's major problem, of course, is we have one monoproduct, and of course, we just have one major revenue source. So one, we need to be disciplined, and of course, we need to expand our revenue base.
Let's switch gear and talk more about the central bank itself. And while you're saying a raft of monetary policy actions so far this year, in fact, since the new year started, it's been almost on a daily basis. Correct. Various interventions, charges, fees, regulations, guidelines for new financial service providers and all of that. Do you think the central bank here is getting a little bit overwhelmed with the bigger macroeconomic environment, is trying to throw everything in just to see what really will stick and keep the economy flowing while the fiscal authorities get their acts together?
I mean, I think the fact that it took a while for the fiscal authorities to come together after the election, of course, at the beginning of the year, there was a lot of election activities, kept the monetary policy guys on the edge. They were almost like the only sheriff in town. So they've had to do pretty much everything from monetary policy to fiscal to trade activities. So I think now that, the cabinet members are settling in, we started seeing some policy initiative coming in, things should get better for the monetary policy guys.
Uchina, do you think doing Salami's Economic Advisory Council will be a game changer?
It should. It should. But the problem we always have is we have a lot of theoretical should I say, process and protocols, but the implementation is where the problem comes in. We always have that deficit. We don't follow through with what we've put down. We have all the, should I say, tangible brains to put things together, but we just don't follow through when it comes to implementation.
What do you think have changed since the last MPC meeting, 23rd of July, to today that could swing the decisions of the members? Wale, let's start with you very quickly before the governor starts delivering his communique.
Well, first thing that have changed, the forecast for growth was stronger 2 months ago. When the number came out, it was weaker. So I think that's one thing that has changed. Then, I mean, the cabinet is in place. There's a new advisory committee for the member. I think they will be looking at what they are going to do in a couple of weeks. Those guys are going to be set up now. So those are issues. And of course, don't forget, oil prices have changed significantly too. It has gone from below 60 to above 70 within the space of 2 months. So more volatile. So I think those are issues that will determine what they will do going forward.
What do you think?
Yeah, so inflation has reduced from the last MPC meeting. Growth came out as well, 1.94. However, like I said, oil has strengthened. But I think key consideration for them will be the liquidity profile in the last quarter of the month. And like they said in the last MPC meeting, the dovish stance by developed markets might be opportunity to see carry trade, so to see flows come back into the Nigerian market. So in terms of what has changed, it's pretty much the same thing, but just know that inflation has come down, growth came down, was 2.01 in first quarter, 1.94 second quarter, and oil price has strengthened.
Uchenna, what do you see from the global space here that you think could be a plus or minus for this committee they're set to make announcements?
I'm going to disagree with the rest of the panelists here saying oil has strengthened. Oil just had a volatile period and it's not sustainable basically because if you check the space, you find out that Saudi Arabia and cohorts have been working significantly to plug those deficits. And if you have Donald Trump trying to get oil prices downwards, it's not enough for you to bank on that push up on price. So for me, I'll say the sentiment is still mixed until we get a clearer picture in terms of outlook. And if the central bank will be using a weekend surge in oil prices to make their MPC decision, that is going to be very short-sighted, really.
Well, the benchmark for next year is 55, or just around 63. Too close to call, if you ask me.
Yeah.
Not significantly, a significant gap there. But again, the OECD yesterday still revised says the global economic outlook is weak. All the central banks are throwing everything, the life jacket they have on, into the water. ECB is doing 25 billion or $25 billion QE. This is the Fed throwing dozens of billions since Tuesday this week. I'm sure they've done more than 100, almost $200 billion. $275 billion this week alone, just trying to keep everybody calm and avoid the recession. So even from the global space, I'm not sure we have so much good news as it were, except what you said about carry trade, which means that if US keep cutting, then we are likely going to see portfolio inflows. But what we need here is that cool money, isn't it?
So I would let me just chip in a bit when it comes to that. So in terms of the carry trade, if you notice, irrespective of how dovish the Federal Reserve has gone, you would see that you still see a surge in the US dollar. US dollar is still appreciating. And that's as a result of the difference between the US and the rest of the world growth differential. If you check, you will find out that the US, irrespective of global slowdown, is still the strongest economy here. So if we have a significant surge in US dollar in terms of price valuation, the carry trade is actually to the US. And if we have a increasing US price valuation, that's not good for emerging and frontier markets. So that's the place where emerging markets are trying to, and for FIs are also looking at in terms of how high can the US dollar appreciate to.
Wale, do you think we'll have any soft landing from, if we look east, at the Chinese? As the Fed is doing those things, the PBOC is also throwing about 300 billion yuan or so into its own financial market as well, trying to keep pace with Washington.
I mean, for the Chinese, I think their biggest concern at the moment is the issue of trade with the U.S. So whatever they are doing is to, kind of soften the attack when it comes to trade with the U.S. But for us locally, I think we can look for how to plug whatever benefit we can from all of this. Just like Bola said, carry trade, I think, we might be able to keep the, portfolio inflow here, if we keep our rates, attractive, because we still need, some reform to keep the cold money, the FDIs that you mentioned. So, I mean, for them to come, they need to be sure that, we've got our acts together, the issues around FX, around revenue especially, are resolved, and, there's a path for the economy to follow. But for now, what we really need, because the reserve is under pressure, if you look at what has happened in the last 2 months, for us to be able to, keep them, considering the amount of liquidity that is expected to mature over the next couple of months, then we need to keep those rates attractive so that, you don't pressure every other variable, especially inflation.
But from recent actions, and just touched on this a few minutes ago, it looks like the authorities want every money in the kitty.
Correct.
Yeah. So the drive for revenue had never been at such an elevated level as this since President Buhari came in, at least, and in particular, again, since the end of the recession, 2015-2016. So it looks like, yes, we're trying to avoid recession, but it looks like folks are beginning to complain that there are new charges on deposits and withdrawal. They said there's some advantages. What's the end game here for the central bank? The FIRS is, the stamp duty is there, and what have you. So it looks like even locally, Nigerians are getting pressured. Wale.
I mean,
sorry, Bola had
yeah, so there's a lot of pressure. And of course, I think what we've always advocated was to widen the tax base, right? Not even necessarily increase the tax, because not everybody is paying tax at the moment. So for me, I'd have thought that the strategy would have been, how do I widen the tax base? But in terms of what I think that is going to happen at the MPC today, so I think it's going to be a hold. And while we think they want to keep it attractive, they won't want to hike rates. Why? Because it's going to be counterproductive.
Godwin Emefiele making very some remarks regarding the latest cashless policy and new charges on deposits and withdrawal, which was announced by the central bank during the current week, and how much interest that has generated and reactions, positive and negative, all the way to the National Assembly. Of course, let's try to wrap up within the next 15 minutes, get our panelists to, it's not what a central bank does, but what exactly it says. Bola now from Kodos Capital, Uchin Amin is from Eagle Global Markets, and of course, Wale Olusi from United Capital. Gentlemen, thank you very much. We are listening to the governor. We'll also try and check in with the stock market to give you a closing wrap of today's market as these decisions are taken. If we get that within the next, before the top of the hour, we'll let you have that. Temple Ashaji is standing by. Gentlemen, this is a hold. This fall in line largely to most of analysts and economists' consensus here. But how do we move forward from here? How do we trade this? What does the economy and the business community need to do moving forward, looking at this hold decision? Wale, let's start with you.
I think for the market, there's no surprise. I mean, what this simply means is that you are not going to have any repricing for bond market yield, because that's always the first point of call. But of course, the focus will now be on the new Economic Advisory Council, whatever they are going to be putting forward for the presidency to adopt. I mean, those are strong indication of what we should expect, especially as we enter into the fourth quarter of the year.
Uchenna, it looks like the Monetary Policy Committee unanimously vote. It looks like they're not convinced about the behavior of inflationary pressure. They don't want any booby trap set by inflation, so they want to watch. That's on one hand. On the other hand, they're giving some very big advice to the government on fiscal stimulus. But I want you to speak to the side of the fact that they're not convinced that the GDP and inflation softening is enough to let go of interest rate at the moment.
If you listen to the communique, you would understand that he kind of highlighted the two variables that are really hitting home, and that's the domestic rate, which is sort of mixed. We have the ones moderating and the other ones that are not looking so good. Then he highlighted significantly towards the global risk, headwind risk, as regards to geopolitical tension, US-China. He also talked about the possible escalations with all of these things. And that in itself is just putting the MPC in a place of wait-and-see mode. Let's just wait and see. Let's not be too reactive so that we don't get our fingers burned. That, I think, is the right decision.
Don't let us get too happy yet.
Yes.
Wale Olusi, Bola Haino, we spoke about fiscal restructuring earlier, and it looks like the MPC is setting some agenda for doing Salami's team and Mr. President and Vice President and the rest of his team, looking at the fiscal stimulus, say there's a time to ramp up on privatization. We need to take a look at our portfolio asset again and see what we got to let go. We need this money. This is coming straight through the front door from the MPC, from the central bank to the fiscal authorities.
Yeah, you're quite right. And like you mentioned earlier on, they are looking for every avenue to ramp up funds. Right, so the federal, Emefiele mentioned that, okay, probably federal government sending some of their assets to the private sector, privatizing it. That might be a good way to go. However, I think the process needs to be straightforward. It needs to be transparent. It doesn't need to be hijacked. Also, you mentioned the fact that CBN has a lot of intervention policies as well towards the SMEs and all that. So there are some of the things that I think might spur growth. They mentioned the fact that they had the ADR as well, just to improve consumer lending into the economy. So those are certain things that might spur growth. However, that might not be enough. They might still need to go to the debt market. But in terms of markets, what I think will happen for equity markets, I don't see any resurgence. But what we are going to see that the MPC is going to try to mop up more maturities or mop up excess liquidity in the system through OMO. And we've seen OMO rates begin to inch up in the past couple of weeks. So we still think that might inch up. So people that are playing the fixed income market, that might be somewhere to look at. So secondary market yields will probably ramp up in the weeks to come or the months going forward.
Wale, do you think this is something for the fiscal authorities to take on moving forward? I almost fell off my seat here in the studios looking at credit to the government, 94.33%. private sector credit just 9.36% below 10%. This is beating the private sector ceiling. The government is raking in, is borrowing so much at fast and furious, but there's a cost to it. How do we reverse this? This is not going to be as easy. It is going to be as difficult as turning around the Titanic.
I mean, that is one of the issues that we really need to look into clearly. I mean, speaking to how government is crowding out private sector, how you are limiting the size of investment. The fact that we are approaching the World Bank now for multilateral loan also might be an indication as to whether we want to slow down on aggressive domestic borrowing, because we need to allow these corporates to invest more, to increase their output, so that you can also reduce the unemployment figure. So long as we continue to aggressively borrow, you increase the supply of paper, and bringing down that rate becomes very difficult. And for us that we play heavily when it comes to transaction advisory, our clients will begin to complain about the fact that yields are too elevated. So coming to the market to raise either corporate bond or CPs, become extremely difficult for them, and it tells on their. If they do so, it tells on their finance charges. So I think it's one thing we need to look at. Maybe we should go by, the option for disposing some of the assets so that we can raise government revenue. Look at, other variables we can tweak here and there to support government revenue. But I would have thought that, some of the, low-hanging fruits, that we can look at is how else can we, some of the things we need to do are actually tough decisions. The easiest will have been, FX. There's something around that we can look at, because our revenue is broadly in dollars, and all our expenses are in naira. Official rate 305, I&E window 360. Are we not, shooting ourselves in the foot, considering that huge gap? But these are very, very difficult decisions to make from the political
It's going to be very, very difficult now.
I mean, because if you can do that, that would have been a very easy way to plug a huge amount, about 80% increase.
Make more naira available at home.
Make more naira
but
available.
Again, inflation is the devil behind the door.
Inflation, that have implications for oil prices and so on.
Yes.
So those are difficult decisions.
Okay, so let's spend the last 1 minute each or less for each of you. The central bank governor seemed to have taken his time to explain the new the cashless policy. It's been in place. It's not new. We all know about that. All of you are on Market Street, so we know. So that is going to be a tough one. So let's take your. Sorry, gentlemen, your 30 seconds are reduced down by 1 minute. We've got Temple Ashaju, business and markets correspondent, live to us from the stock exchange trading floor. Temple, you have about a minute. Give us a wrap-up of the market today. We're just chewing over the MPC communique.
Well, it was a positive close for the markets today. We saw the all-share index closing up about 0.19%, thanks to the consumer goods segment of the market, because, again, we saw new entrants into the likes of Dangote Flour, Dangote Sugar, Nestle, which is a major capitalized stock in the market. Some gains that we saw around that particular company also contributed to the gains that we saw today. In terms of whether the market actually really reacted to the decision of the CBN MPC, I think it's just the traders here doing their own thing. Basically, we've been seeing there's some macroeconomic variables that some investors have been reacting positively in recent time, and so they just continued with the trading today, because, again, if you look at the banking stocks, there was a bit of profit taking on that counter. It was the consumer goods that pushed up the indices this weekend, this Friday, Bosun.
So it looks like, Tempo, this is a positive close to the trading day. But again, whatever happens at this MPC, whatever the market takes on, we're not going to know until Monday, when everybody must have slept over it over the weekend.
Sure.
Okay, great.
Yeah,
thank you so much, Tempo. We appreciate it.
Thanks, Bosun.
Yeah, thank you. So we'll continue from there next week. Tempo Ashaju from the trading floor. Gentlemen, 30 seconds each on a cashless policy. Do you think this is sufficiently explained by Mr. Central Bank Governor Awale?
I think the central bank raised some serious issue around security and, the issue of fraud that we've seen, and the fact that the people that
illicit financial flows as
exactly
well.
financial fraud, and for the average man on the street, they constitute about a very small fraction of those who the huge amount of money, 500,000 naira and 3 million for corporate, that will be directly affected. And of course, it's even the excess on that amount. So I mean, I think he's done some good explanation. Hopefully, we'll do enough sensitization so that people will get to the point.
Okay, Uchenna, thank you.
My issue is it's okay to evolve as time goes on, but do we have the necessary substantial infrastructure to prevent the new problem that will arise? So if we get to increase that electronic payment, we know we can also give room for possibility of cyber crimes and other electronic fraud. So do we have those checks and balances to prevent that? So what you're running away from, you sure you're not going to meet it in another format, in another space? So that's
I like that. With the licensing of new payment service banks and other financial providers like MTN and others.
Yeah, so that's just it. So once we can always prepare ahead and front run any possible risk, then I think it's fine.
It's a transition we're in, really. And I agree with that point. Transition from being a cash economy to that bridge, there's always a risk, whatever you be.
Yeah, so I think he tried, right? There are a lot of positive to the cashless policy, and of course, a lot of people are not looking at the positive. So I think there needs to be a lot more sensitization, and of course, financial inclusion, and a lot of our payment channels and payment gateways need to be well intact, because that's what a lot of people complain about, that they usually do transfers, and of course, it bounces back or reverts.
And all of you guys are on the information digital highway. I don't need to ask whether you carry 500,000 naira around. If you have anywhere like that. I'm sure no one here in the studio. Thank you so much, Wale Lucy. Thank you, Uchenna Minis and Bella Hoina from Kodos Capital. Thank you, everyone, for watching. We'll see you next time. Have a great day.